All right. I think we're live. Let's see here. I believe we're streaming. What's going on, everybody? And it's Friday at around 1 p.m. And excited to be here with you guys every Friday at 1 p.m. I am sitting in a different location, as you can probably tell. So hopefully you can hear me okay. The microphone, I've been told, upstairs in the home office is not exactly working properly. And also today I couldn't get downtown to the other office. So Um, we are sort of switching things around over here a little bit in the house, so just forgive me if you hear a little background noise. I got my youngest underneath the chair, underneath the table. We're not getting the. Oh, hold on one sec. This is real life, right? Right. Yeah, she's not going to go outside. It's all right. I don't know if you guys have any dogs, but animals, pets, sometimes they don't want to cooperate. So, hey, listen, we're here every Friday at 1 p.m. to talk about real estate investing. Today, we're going to talk about funding. We're going to talk about leveraging commercial loans. uh yeah, my dog over here is not cooperating. She doesn't like funding, I guess. So nonetheless, I'm here for you guys. If you have any questions, feel free to use the Facebook commenting feature to go ahead and post your questions. I will go back and check if we have time as we're actually here live, and then I'll also have, if I have any folks that can't get answered live, I'll get those addressed later on or as soon as I possibly can. And so let's see. Like, I'm curious in the room. Like, again, those of you that are here live listening, and those of you might hear the replay. First off, where are you from? Tell us where you're sitting right now, and what brought you here. If you want to share that as well. If you're actively invested in real estate, you're looking to get into real estate. I always like to know kind of who's here with us in the room, and then also let us know. Like, have you ever leveraged, other people's capital? Have you ever leveraged, commercial loans? Have you ever leveraged private money, as they say? And I'm wondering, kind of what that looks like. If you want to share, you don't have to share that in the comments, but if we do have a conversation, I'd like to know about that anyway. Um, when it comes down to it, the thing that's less known is the way that capital works on the debt side of things. I think people think that they have to go to a bank typically and get a mortgage like in their personal name to go and do real estate deals. And that is what I thought, at least initially, before I got into it and realized how that actually isn't the case. You can leverage all different types of capital sources, but specifically on the debt side, there's a thing called what people typically call hard money. And hard money basically means that, the definition in my book, at least, and I think a lot of people would say, is that the loan is being made to a hard asset. And that the asset is not just the individual, individual person like you or me, our qualifications to have that loan made. It's just the asset is actually the real estate, right? The hard asset. And so in that regard, hard money historically, has been at certain percentages of what's called loan to value or loan to cost. And so most lenders that do hard money don't want it to be 100%, that they're providing 100% of the capital to actually make that loan against the property. They want to have some what's called equity, right? So equity is going to be where a certain percentage on the value and or a certain percentage on the cost of the project. So I'm going to give you guys an example today. That's why I'm on Zoom, and I'm going to show you some stuff on my screen and kind of break it down a little more detail. But it's kind of like a preview of that just for today to give you guys a frame of reference of kind of what we're talking about here. And so when it comes down to it, we have two things. One is called loan to value, and another thing is called loan to cost. And so most like hard money and private money lenders and even banks are going to lend on some percentage of those, one or two of those numbers. Another fact that I want you all to know is that, typically appraisals are involved. So meaning like you're going to have somebody order an appraisal, a third party appraisal management company, or you're going to have somebody who's actually, from the lender side ordering that appraisal to an independent appraiser that they work with. But appraisals are going to establish that value, that current value, what we call as is value, AIV, or the ARV, the after repaired value. And so, or both really. I mean, it's what's called a dual value appraisal. So that's important to mention because you might be sitting here saying, well, what if I just have comps? Like, what if I just have the numbers figured out because a realtor gave me a CMA or a set of comps, or I have some idea of what the value is based on XYZ, whatever it is. That's fine to initially look at the deal, but most lenders, at least like institutional type lenders that are going to have, companies or businesses, small or medium or big, or banks for that matter, are going to look to, third party appraised values typically of some kind. So there's a lot more to that as far as how that plays into if you're here and you're newer maybe and you're not sure about how to structure your offers. Like we could talk about that. If you have a question, you can shoot me a DM about it and we can talk as much as I can give you help there. But when the seasoned investors in the room know that, like, you could have an appraisal contingency, but that's usually less appealing to the seller if you have a contingency to get an appraisal and have that be basically the limiting factor of you doing the deal. So there's a whole conversation on contingencies. We talked about this in one of our meetings in the Growth Collective this week, our private coaching group. Contingencies are different than like getting something as informational, about the property, whether that be contractor quote, inspection, value established through an appraisal, whatever. But a contingency literally says that if those things come back, if one or more of those things that I have a contingency for come back and are not satisfactory, that basically I have the right to cancel the contract legally without having any sort of additional recourse. So I do see we have like about a dozen folks in the room right now. If you guys could do me a favor, and I'm not able to see the comments at this moment because of the way we're doing this, please stay engaged. Please continue to post comments or questions if you have any. And then my team is helping monitor some of that. So you might see some different folks coming in to help support you in that way. With that being said, we have, contingencies, and I was saying that basically you're looking at, with lenders, they're looking at loan to cost, loan to value. And so they want to look at the equity. They want to look at how much skin in the game, so to speak, just like a bank would look at that and say, hey, do you have any money down, right? You put any money down. Now, how does that work if, and contingencies, I think there's a part of that too that I want to make sure I'm clear on. You could still buy a property even if it doesn't appraise exactly where you thought it would appraise. You could still buy it so long as you want to come up with additional equity, or as long as you're willing to get a smaller loan potentially, right? So there's different things there, but essentially the equity, the down payment, the lender wants to see that somebody in the transaction besides them has capital, right, associated to this project or this property, so that there's risk that's mitigated, right? That they don't have this, all the money is lent out and that's just all them. And even if they get it at a certain percentage of the LTV or the LT of ARV or the LTC, all those different things are different numbers, but they all play into kind of how the loan is structured. So to kind of make it simple, think of it like, they're willing to give you, let's say, around 80%, and you come up with the other 20%. So, and you, I say, is plural because you could be you and your business, you and your friend, you and an investor. Depends how you structure all that. Today's not about structuring private money deals as much as it's just an overview of like how the money works, so you guys can kind of think of, how does this work for me and my deals, right? How can I use this strategy of using other people's capital where they can make money with me and I can make money too, and then everybody's winning. And there's a way to actually do what's called the BRRRR process, the buy, renovate, rent, refi, where you can essentially use someone else's capital to secure the property, renovate the property, and then ultimately refinance out all that capital and have the property with a stabilized loan on it that doesn't have anything to do with anyone else's money that you have to pay back besides the main lender that gave you that loan. So in other words, like, have that property stabilized. So that means that every month that the tenant pays the rent, you're paying the loan, and then the difference is what you're keeping as cash flow without having to have your own money tied in, without having to have an investor's capital tied in, or any other individual or party. So that's really, I think, what a lot of people want to do with BRRRRs. And then anyone here who does actually work in that space as rental, property and landlording and doing BRRRRs, that you have to understand, you probably know now, that rates are not helping us in any capacity at the moment. So we should know that. I think everybody kind of knows that with the news and what's going on. Rates are, I'd say, oscillating down from what I can tell, at least in the commercial lending space, which is where we focus as far as real direct lending and its affiliates. And so I will tell you that the rates are one thing, but also the leverage points as far as loan to cost, loan to value, loan to ARV, all that kind of stuff. As far as those levers are changing for sure. And there's a risk mitigation occurring in most markets, whereas like lenders don't want to be at the, 85 or 90% loan to cost. They want to be at 80, 85. They don't want to be at, 75 or 80% of ARV max. They want to be at 70, maybe 75. So you're seeing that happening, but then the rates are also adjusting a little bit downwards. But we're going to talk about a special kind of loan today at some point in our conversation, called a DSCR loan, a DSCR loan. So what a DSCR loan basically is a debt service coverage ratio loan. So if you guys are taking notes, you can write down DSCR equals debt service coverage ratio. I'm going to share my screen in a couple of seconds here and kind of show you just a part of a presentation from another thing we had that has a lot of these terms outlined. So if you missed that, don't worry too much about it. But a DSCR loan is going to be, the loan can be made against the asset that's producing revenue or could potentially produce revenue relatively soon. And then what happens is the income that property produces, that asset produces, basically pays for the loan servicing. It's kind of like a hard money loan, right? The difference is that these DSCR loans and really any commercial loan that I have access to that I know about that's available through Real Direct Lending and its affiliates, any of them, I will say pretty broadly, maybe with like very, very slight exception, like a sliver of like a 0.5% or less of people that can get deals that can get what's called a non-recourse loan. That's more on the bigger deals, more qualified, high net worth individuals that are operating or working together with people operating. You're going to see those kind of loans because those are non-recourse because the asset and the individuals that are coordinating that property, they don't have to sign. They're not signing for the loan. They just know that this asset, this large apartment building, for example, for a non-recourse loan, is so stable that the property will definitely support the debt service, meaning the loan payment every month. That's a different class of assets. It's a different class of everything. What we need to see is what's most applicable for most of you here, including myself, on most deals is going to be the DSCR loan, which has a what's called PG, a personal guarantee. So that means that someone's signing to have recourse, meaning that the bank will have or the lender will have the ability to put a lien on the property, of course, but if that lien is not paid off or not paid properly, then they can come after the individual or individuals to collect the payment of that loan, basically. So that's what a recourse, a personal guarantee is. Some of you might say, well, that sounds scary, that sounds nerve-wracking, and I get it. The fact is, that's the risk you're taking, though, as a real estate investor, that sometimes, you have to be willing to sign for things that otherwise you haven't done before. And some of you are just like, it's second nature. It's no big deal. Like you're ready to sign for stuff because you know what you're doing and you're comfortable with the numbers. But if you're not totally sure about that stuff, that's another great reason to have a conversation. I'm happy to explain. If you guys want to check out, you can go to realdirectlending.com and you can basically click on a couple buttons there. And there's a button for like, hey, I want to get some more information. Or, hey, I'm interested in getting a loan done, have a property I'm looking to get funded, that kind of thing. You can go to realdirectlending.com and basically right there, it's going to submit to our team. And then you'll have a conversation with someone from our office to actually facilitate how that all works in some great detail, that more than I can go into today at this moment, for your specific scenario. But then if like, say you still don't have a lot of clarity, that's where you want to have a conversation about possibly getting into a coaching arrangement where we can talk about that a little bit later, but some of you know that we do offer a private coaching group and a program and a great way to get into the business and even grow an existing business as a real estate investor. So that's where like, maybe it's not just a money conversation, maybe it's other stuff. So let me share my screen. I'm actually going to first, if I could try to find a way to check Facebook. I don't know if I can see the comments. I'm going to try to here and see if there's anything going on that I can help with. All right. So we got some folks commenting. All right, I'm not going to focus on that right now. That looks good. Let me go ahead and actually get my screen shared. So what I'm going to share here, oops, that's the wrong button. Let's share the slideshow. What I'm going to share here is I'm going to share, hopefully this works properly. This is from day 4 of the Dealmaker Challenge, right? So the Dealmaker Challenge that we had back in December, which we're kind of like due to have another one pretty soon. So if you guys think we should have a Dealmaker Challenge of some kind, if you want to get like a couple of days, 2 to 3 days, maybe 5 days max time, let us know that you're interested in that. Maybe post challenge below as a comment if you want us to do something like that in the near future. We'll get to know that you're interested and we'll get you the information first. But essentially what we did was we had a 5-day virtual event, and this is day 4 that we went over the funding strategies and explanation of what that looks like, and how to leverage funding and other people's money to do deals and grow your business as a real estate investor. So on the bottom there, you can kind of see the different companies that I own, and it's not all inclusive. There's a couple others that are not there, but just those are the ones that are most relevant for you at the moment. So you can see that's what we have in our arsenal. JDL Ventures focuses on wholesale deals and providing coaching to real estate investors all across the country. Douglas J Development takes on projects to renovate and sell, and also provides some consulting services from time to time to different individuals that want to have project management or consulting for their property. And then Investors First Title is a title insurance agency. You can see down here, I'm looking at the bottom in case you're wondering where I'm looking. Title insurance agency based in New Jersey and also licensed in Florida as well as a couple other states coming up soon. And Ken McCarthy is my business partner, so you definitely reach out to us if you're interested in getting some title insurance for property coming up, or you know someone that could benefit. And then realdirectlending.com is our brand of our concierge marketplace, essentially, where we help you connect the dots with the right capital stack for real estate investing. So if you have looking for a direct lender, we have multiple groups that we work with, multiple funds that are direct lenders that will help you fund your project, usually up to about 85% of the cost which we'll get into today, depending upon what kind of project it is and how big it is, where it's located, what your credentials look like, and things like that. So there's no cost to the service. We get lender paid. So, and it's commercial loans only. We're not a MLO mortgage loan company. We don't do any residential lending underneath Real Direct Lending at all. So, all right. So with that being said, let's try to jump in. I'm going to kind of skim through, and I'm also going to monitor, I guess, maybe I can monitor my phone. That way I can see the comments if there are any. That's probably a good idea, right, Doug? Yeah, I think that's a good move. Hold on 1 second. Cool. So I want to make sure you guys don't hear like an echo as I'm talking, so this way it's not distracting. So look, so there's some key terms. I kind of covered some of these a little bit already, but I'm going to rehash them. So if you guys want to grab a pen and paper, now's a great time to do that and kind of take down some key terms about private money and OPM and funding and stuff like that. By the way, I'm not seeing a whole lot of engagement in the chat, so make sure you guys are stepping it up a little bit. Let me know, what your main question is. There's got to be something on your mind. Don't feel like it's a silly question at all. Just let us know what your main question is. And let us also know if maybe you have a deal. You don't have to share the whole deal information, but if you're working on a deal that you need capital on, we probably could help you out there too. So let us know about that. And if nothing more, just stay here and listen in. That's totally fine. So key terms. All right. HML, we talked about that. Hard money lender. Again, hard asset loan is being made. Historically, these are commercial loans made on residential and commercial property. Private money lender, PML. So a private money lender is a little bit different. We're going to talk about some of the key differences in a little bit, but in more detail. But essentially, think of a private money lender as either a small company or an individual or a couple individuals that would want to lend capital privately, as in they're not, there's no bank or institution involved. It's more or less a couple of things on paperwork, and then transactions are made as far as giving a check or sending a wire, or whatever the case is, for typically real estate transaction, right? But these lenders can also make decisions like you see with shows like Shark Tank, where they invest into different businesses or they invest into real estate that way with equity and things. So it could be a lender or an investor. It just depends on what you got going on and what you're looking to provide and what the exchange of that capital for what in return looks like. Today, we're going to be talking more about lending because it's more on the debt side of things. So you guys know the majority of what you need is already available through realdirectlending.com. So, my responsibility here as admin and leader of this group and owner of JDL Ventures and the companies you see below is that I'm here to serve and I'm not here to sell anything. So if you're wondering if I'm going to sell something, I have nothing to sell. I'm just here to serve your needs. And really, lending is one of the most, I think, under utilize or talked about concepts when it comes to educators in this space, because a lot of them don't really understand how it works. And I'm not blasting anybody. I'm just simply saying that some of them don't ever actually do real estate deals, at least not as many as you think. And they've never worked inside of a fund or worked around a fund or been a borrower of capital this way. So they don't have the understanding. And I say that respectfully, that you have somebody here leading you guys in this way, in this capacity, where I've actually worked inside of a fund. I've seen from the inside out. I've also seen it from the outside in before I worked at that fund. And so I understand how this stuff works from being around it directly. So it's my privilege and honor, seriously, to share it with you, because it's going to help you understand how much more accessible capital is to you right now than you probably even knew just 20 minutes ago. And for some of you, it's going to be reminders, and others, it's going to be like, oh, one little nugget. That's totally fine. But the fact is, there's going to be a lot of content today, and I'm sharing my screen on purpose because, and I told the team, I need to make sure I could do this so I can give you guys the value and ultimately see how we can add value from being a lender or bringing a lender to the table for you, right? So LTC, loan to cost. So what does that really mean? It means if the project cost is, let's say, $200,000, I'm buying it for $150, I'm putting in $50,000. My cost is then $200,000. It's $150,000 plus 50. So that means my cost is 200. My loan to cost is a percentage of what the loan can be maxed out at. And I'll talk about why the max matters. But maxing out the loan of what I can borrow, okay, on that $200,000 of cost. I will tell you that generally speaking, on short-term loans right now, typically 12 months or less, on what's called either bridge loans or construction loans. People sometimes use those interchangeably, but they're not really the same. A bridge loan usually doesn't have the construction, but it's just a bridge from either a certain phase in the project or not owning the property to actually taking title. A construction loan is a type of loan like that, but it has a construction escrow or construction budget built into it. And so your loan to cost is going to be typically, right now, I'd say in the marketplace, 80 to 85% in most cases. Also, a quick disclaimer, if there's anybody who does lend in the room, I'm asking respectfully that you don't like promote. I'm not sure if you are, but this isn't the opportunity for you like to blast my group with like your promo. With all due respect, you can happily let us know about that. We're happy to refer business to you if it makes sense to, but respect the fact that this is our domain and we're happy to have you here. But just please be mindful of the audience is not looking to get like somebody out of the blue just coming out of nowhere saying they could do all this stuff. That's part of the reason why we're here serving, to give the education and then ultimately give the opportunity to serve in that way. So, but it doesn't mean we can't do business together. So I'm all about collaboration. If you guys don't know by now, happy to work together with any lenders in the room that want to collaborate. So let us know about that, and we'll work on putting something together that makes sense. Now, with loan to cost, again, 80 to 85% is kind of the range I'm seeing in the marketplace. That's then going to be maxed out by something called loan to value. And loan to value is not just the current value, like I said before, it's also what's considered the ARV, the after repaired value. So let's say that property that we're buying for 150 to put in 50K, let's say that property will be worth like, 300,000, which would be a great deal, by the way. $300,000 is an easy number to go off of to kind of give you the math on this. So let's say that property is worth $300,000 when it's all said and done. You're buying it for basically 50%, but you have to put in 50K, $50,000 to renovate it. So you're into that project for $200,000 on the $300,000 resale. That means that you're at, if you look at your total cost basis of $200,000, it's 200,000 divided by 300,000. It's basically 67% is your total basis to your actual ARV. But that's not the same as what your loan to ARV is. So your loan to ARV actually is whatever money you borrow, right? And we'll go through this on a sheet in a second. You guys are, I'm kind of just planting some seeds here for you to understand how this works. We'll go through the actual numbers together. When you go actually get the loan's going to be at a percentage of what the cost of the project is. And that number can't be above a certain percentage of what the ARV, or that you can't have a certain number above that, right? So it's, again, I'll show you that, but there's two different things there. What I find, which is interesting in the marketplace of lenders, and I heard this as a borrower many times, and it got me really confused, that there were people saying they can give me 90% of the value. And what they really were saying was they're giving me 90% of the cost. And then because then when I submitted an application to that individual, they said, oh, well, actually, it's 70% of the value, but it's 90% of the cost. And that's a big difference, right? Because if I have a great deal that costs me much less than what it's worth, well, I want to have the loan to cost be really high, but I also want to have a little bit of room for that ARV to have the leverage I need so that I come in with little money, but I have a spread there that I can then have as my profit and I can leverage up and not have to bring as much capital if I can avoid it. Versus like what some people say, well, 90% of the value. Well, they're saying, I'm thinking it's like 100% funding at that point, when this is way back when it first started. I didn't know better. I did actually find 100%, but it was private money. It was a private money lender individual, right? Who is still not lending, but he's still in the business, still a friend. I reached out to him recently. So if he hears this message, I appreciate you, that gentleman having a quick conversation. Hopefully we get on the phone sometime soon. That'd be awesome. But we texted a little bit the other day. So, hey, listen, so it's like, with the ARV percentage, like when I first started, I didn't know, maybe you guys didn't know, like it's not 90% of the ARV. So if you think you have that house is worth 300,000 and you take 90% of that, that's 270. So you would say, well, if I'm in it for only 200, is a lender going to like cut me a check for $70,000? No, that's not the way it works. Unfortunately, it's just not the way it works. So the lender would not want to do that ever. What they want to do is they want to say, hey, it might be worth 300, but you have to sell it to prove that. We're not going to take the risk and lend you what you think it's going to be worth before you even get there. So what does that boil down to? It boils down to the fact that you're going to have a certain percentage of this loan to cost right here, right? That's different than the loan to value. And we'll see that in a little bit when I show you guys on sort of like a whiteboard on the screen. And there you go. And just kind of skip past a little bit. I don't know why I did that, but LT of ARV, loan to after repaired value. So I talked about that before. Once the property is done being renovated, and once it's actually, stabilized as far as, all the upgrades and updates are done, and the property's either going to the market to sell or you're going to refinance it, the loan to ARV looks at like, what's that percentage of the loan compared to that new value? So I just kind of said before, if the new value, let's say, was $300,000, then usually lenders right now are looking at 70, maybe 75% as a maximum loan based on that number, right? Now, a very common question we get also is like, well, how do they determine what that ARV actually is? Remember I said before, lenders look at appraisals, like the ones that do lending for a living and even others that don't would want to know what's the value of the property. They want to see the appraisal. So with the appraisals, you're going to have a scenario where the appraisal is going to have what's called dual value. So it's as is, and then ARV is after repaired. So like AIV is whatever it is. Let's say you're buying it for 150. If it appraises at 150, that's perfect or better, If it appraises at 140, sometimes lenders will actually adjust down a little bit what they'll lend because they don't want to be leveraged too much to what the current value is either. Even if you're going to get a bump up in value, additional value, they're not going to want to lend too much. And so it really just depends, right? But the fact is, the ARV is the most important number because the ARV, and I say that because both of them are important, but to the lender, they want to know how are we going to go spend 50K, for example, to get 300. They want to make sure that that 300 is attainable because in fix and flip, for example, or even in BRRRR, which is buy, renovate, keyword renovate, and then rent and then refinance, the lender that's providing the first position loan on the front end is actually kind of speculating, but not really because they're getting appraisal, but they're initially speculating, you're speculating the possibility of what could happen, but it's not definite, right? Whereas if you took a property that just appraised and you're just refinancing using that appraisal, then it's already been established that the value is this based on an appraisal, and then we refinance it, for example. So you have to remember that the reason why there's percentages of, and this is kind of like me rooting for my, lending friends that are in that space that I work with that have different groups and funds. Like, listen, borrowers out there got to know commercial loan borrowers need to understand what real estate investors and funds that lend capital, it's very unlikely that there can be 100% funding available, especially if you haven't had a deal done yet. And especially if, let's say, you don't have a great business plan, which is basically where like analysis comes into play. So you don't know what you're going to do yet. It's very unlikely that someone can say, here's 100% of what you need, just go do it and let me know when you're done. You're going to have to do a little bit more than that to get that kind of capital available. It's not going to be typically from an institutional level lender. It's going to be from a private lender, and we're going to get to some of that in a little bit as far as family and friends and whatever, but that's different. Even then, you still have to have your stuff cleaned up and buttoned up as far as what it looks like to get to that level that you want to get to. So I think it's unreasonable to think that you're brand new coming in. People said you can get 100% other people's money. You should call a few people, and all of a sudden you're going to start getting people pouring, hand over fist to go give you 100% of the capital. That's just not realistic. What's better would be like you come in, talk to someone like me from Real Direct Lending or anyone else that's out there that you connect to, and it's like, hey, here's my project, here's my situation, here's what I'm looking for. What do you think you can help me with? And let us tell you like what we think is available, because I'll tell you most of what's available is going to be at that 80 to 85%. Well, why? It's going to be because they want to hedge risk. Lenders don't want to be over leveraged and have to deal with the properties that have to be either short sold or whatever the case is. If the borrower doesn't sell the property, doesn't refinance the property, they don't want to be holding that property. That's not the business that they're in. So they need to keep the money moving basically and get that property and the loan associated taken care of and get on track. And so fact is, for you all out there that are trying to do like real estate, which is very doable, but it's got to be a planned thing, like where you could do it with, other people's capital. You have to say like, here's my project plan. We use a thing called runyournumbers.com. So if you guys don't know, runyournumbers.com is a free tool. There's a paid version. It's not my tool, but we refer business to it because it's a great tool. We've used it over the years, probably the past 5-6 years, and essentially have taken that tool and used it to provide to lenders and investors and our own team understanding the numbers and seeing like where does this make sense or where doesn't it make sense for a particular deal. And the fact is, like, having a tool like that, for example, and sending it to a lender would say, hey, I did my analysis, I think this is how I can make money on this, would you be willing to give me a loan of X? That's more likely to be heard than just saying, hey, I have this great deal, I need 100% of this much money, who wants to take it? It's not that simple. So I think you guys get that. And that's where you want to go. Like if you need some help there, realdirectlending.com, you can check out and basically submit a form to get more information. And then someone from my team or myself will reach out and we'll set up a time to actually talk through that kind of thing in detail. Now the DSCR, okay, keep your questions coming. If you do have questions, I'm going to check in a second here on Facebook. The DSCR we talked about before, that's debt service coverage ratio. So again, that compares basically the payments that you're making on the loan to the net operating income of the property. And for today, looking at the time, we might have a little bit of time. We're about halfway through here. So I'll see how fast I can get through it, but I'm going to try to show you an example of like how that looks either inside a deal check, which is run your numbers, or inside of a spreadsheet or possibly a Word doc. I don't know which one we're going to do yet. So, and there, I don't think I did that on purpose, but gap funds, it just kind of filled in the gap there. No pun intended, right? Okay, Doug, you got some corny jokes today. What else is new? Everybody knows me that I don't have that good. I'm not that good with my humor, guys. Sorry. So if you want to make me laugh, enlighten me a bit. I need to get some good jokes. So gap funds, total cost of project minus debt provided. So basically that means like the money that you're not borrowing from the lender, those are the gap funds. Those are where you'd have to have the equity. You'd have to find either a business partner or your own capital or some type of private lender that would give you the capital for that portion. And that's a more complicated discussion, but something that we can have. And that's where you would basically raise those monies or find those capital sources privately with people that already know you, that you already have done business with, or do you have in your connections. And it's the whole KLT, know, like, and trust. So any of my coaching clients know that's what we talk about. You have to start with people at any level that know, like, and trust and kind of grow from there, because this is newer for a lot of you all. And just like me, like I started with people that were closest to me. So I started with my family, I started with my friends, I started with people that I met at network events that I kind of clicked with. And so, you don't just go out to like the whole world and say like, hey, I have this opportunity. Who wants to jump in? That's not how this works. Like usually you're going to start, and you need to start because there's different rules around this and laws. Start locally, start close to you and kind of branch from there, because fact is like it goes back to, does the project make sense? Do I have confidence in the person's ability to do the project? And if things don't go well, like they haven't sometimes on many people's projects, how does the person navigate through? Do they have a plan to complete and resolve the issue? And if not, then that's a bigger concern as well. All right. So let's see. I see Indira, I think. She says listening and learning. I'm going to refresh here. Let's see if I can get another set of comments. All right, we got some folks looking for run your numbers. All right, we'll do a quick intermission for my friend Andrea. Andrea, how do you calculate your take as a wholesaler? I'm a little confused with that. So that's a great question. As far as that goes, like calculating your take, so I would say it's going to be likely structured as either an assignment fee or your profit. And that means like if you profit, it's going to be probably from taking title. So that's a little bit loaded of a question. But to calculate it though, what you want to think about is what number can someone else afford to buy this wholesale deal from me for? Like what could they pay to me or pay to the seller and then have me get my fee built into it as an assignment fee, for example? What can someone still afford to invest or pay in this deal so that they can make a profit that's fair? And that's a kind of like relative question, and that's on purpose because it depends on the deal. It depends on the complexity of the renovation. It depends on the location of the property. Obviously, it depends on the investor's preferences. Like a lot of things play into that. So I would say it's not like the old, if it's 70% or less of the ARV, you're golden. Like it's not like that. I mean, I've seen people pay 90%. I've seen people pay retail because they needed a deal. Like they need a property to buy because they're going through a 1031 exchange, for example, and they need to close like yesterday. Like they can't if they want to get the 1031, but they have to close ASAP. Like they have pressure. So it just depends. I would say in general, people want to have like a profit spread with respect to fix and flip. They want to have a profit when it comes to cash flow. They want to have actually money if they're landlording, have some money coming in, extra every month. That's the whole point of being a landlord, right? So those are my 2 cents for the little intermission there. Hopefully I answered your question, Andrea. I'm not sure if you have further questions. Feel free to do that. I see we got Quentin on here as well, I think, and a couple other folks. I can't see everybody. Costas, what's up, man? How you doing? Indira, Rosaline, I think, is here as well. So Ellie, what's going on, everybody? Cool. So let's keep it going. So common funding structures, I'm going to kind of monitor on my phone here, Facebook. And these are for your deals. This is including now not just the debt side, but this is some comments, and I'm going to go fast on it because I want to get to the number crunching with you guys on the debt side of things. You could do 100% equity in cash, whether it's your money and or a private money investor. That is a possibility. I'd say we had only a couple of deals that we've ever done that way for a lot of reasons because of one of the things I'll talk about in a second on my next slide. We've had a lot of deals that were debt plus equity, which is, taking on a loan, a commercial loan for renovations, for example, like we're talking about today, and then using either your capital or a private or hard money lender to invest into or lend on, depending on how it's structured, the rest of it. And then there's also the 100% debt concept, right? So that's where like typically I've seen only private or hard money that are like individuals or people that you have a really good relationship with that have a lot of track record would even be willing to do 100% debt, okay? Because it's a risk that they're taking. Even if it's at a discount of what the property is worth, today, tomorrow, a year from now, whatever it is, it's still a risk that they're taking, providing 100% of the capital. And then when it comes to, joint ventures and partnerships, there's a lot of different structures there that we just don't have time to go through in this moment. I can tell you that inside of our private coaching group, though, right now, there's two specific joint ventures going on. Actually, more than that, technically, but there's two that I know about in our own vicinity that are happening within our coaching group that came as a result. And I'm blessed to say this, and I'm excited for these guys. I'm not gonna call them out right now, but they are doing deals from the group. Like they actually connected in the group. They found each other that one had a need, which was gap funds. One had a need, which was a partner that had gap funds, and the other guy, they each had their own respective areas. The one guy's want to take a loan. The other guy's bringing the gap funds. We helped bring together the deal. We brought together the contractor. We're bringing together most of the capital through Real Direct Lending and its affiliates. And the fact is, like, that connection happened in a private coaching group. It's not just a coaching group where you just hear me every day or my staff of coaches, experts that literally put deals together every single week. These guys, they're not just like pouring out information, making you go nuts. Like we're all about integration and implementation. So you'll hear more about that in a little bit. I'll tell you kind of how that looks and what you guys can consider because we do have something coming up special for the weekend for Mother's Day. So, we have a promo that we're doing kind of to bless and thank all the mothers and those of you that want to get going and actually get this to the next level. We have an opportunity for you to come into something that we've never really done before in terms of how we're structuring this. Okay. But the fact is, and God rest my mother's soul, we lost her back in 2016. I think about that every day. And I think about there's no way to remember her this weekend besides just pray and just be with my faith and just know that she's in a better place. But it's hard because I was the last of 7 kids and I had a really strong relationship with my mother. And, ever since she passed away, it's just been a lot different. So it's just everything has changed. Obviously, we all change every day, but not having the mom to call when you want to celebrate something or you want to have a conversation about something that's really on your mind or hurting you in the heart, that's tough. So anybody out there that has a mother who passed away, or grandmother, whoever's close to you, it's a mom, just pray for them, especially this weekend, because they need that, and you need that. And the people around you they need to see you be okay. So fact is, my wife is another amazing mother, and all the other mothers in my life, my sisters, a couple of my sisters are mothers as well. So God bless them and all the mothers out there. So it's time to celebrate this weekend. And then tomorrow is even more exciting because we have my daughter, not more exciting, I guess. My wife will yell at me for saying that. She might even hear this message. But my daughter, another female in my life, is actually making her first Holy Communion tomorrow. So that's exciting as well. So it's going to be an amazing weekend, God willing, and celebrating a lot of beautiful things in the family. So with that being said, we do have, like I said, a Mother's Day special going on, which I'll talk about in a little bit. But again, joint ventures and partnerships. So if you have the right connections or in the right spaces, in the right rooms, as some people say, you can find these connections relatively simply. There's still work put in because it wasn't like we just said, hey, snap a finger and then this person connects to that person. All of a sudden they start doing business. It does take time to build those connections and relationships. But I have to give credit to both of those guys and the other people in the group that are doing that they're taking the initiative. And I'm so blessed and honored to hold that space and be that platform and be a means to help you do that. So I'm so excited for those guys and gals in the group that are doing that. It's just so awesome to say. Syndication is a more complex model. You see this on apartment deals. You see this on, private money funds and stuff like that. There's different things that are done with syndication. It's more complex, usually larger deals. I'd say that for the large majority of the folks listening to this message in this group right now, with all due respect, and even most times for me, I've never really syndicated a deal. I've been a part of a syndicate. Actually, my IRA my self-directed IRA was part of a partnership on a syndication, but that was years ago. So the fact is, like, this is not as common if you're doing residential real estate or small, commercial, multifamily, that kind of thing. You'll see this on the deals that are 7 and 8 and 9 figure large, like those kind of deals. So if anyone's doing that, by all means, you know what I'm talking about. But and I'm happy to talk with you because I understand it. And actually, I'm part of multiple commercial real estate mastermind groups that talk about this all the time. But it's just not needed on most residential fix and flip or buying and hold properties. All right. Now, I see Ilya. What's going on? How you doing? And Damien, I can see you there. I'm not going to read all the questions just yet. Oscar and Andrea, good stuff. And then Frank is here. So awesome. Appreciate you guys participating. And I'm going to continue to kind of monitor that on my side there on my phone. All right. So we could be on Zoom and Facebook. It's okay. We could all be friends. Like last week, we had a problem with that with Facebook. I didn't like for some reason when I was like trying to share my screen. I don't know why I couldn't, but now I'm on Zoom and it's so much better. I feel like I'm at home kind of. It's just I'm used to this interface, but I can still see you guys on Facebook. So key considerations. All right. Calculate the cost of capital when underwriting the deal. What does that mean? Well, it means that I need to understand, use runyournumbers.com to help with this. Like I got to put in my loan parameters to see how much is it going to cost me, for the interest rate? And I got to get that information from the lenders. So maybe that's a good reason to contact, go to realdirectlending.com, set up a conversation, talk to one of my team members and figure out like, what does that look like on your typical deal? Every deal is a bit different, right? Every borrower is a little bit different. So, calculating that though is important because you can't just say that there's all this profit and then you don't have the factor of like, well, what about the interest expense if you're going to leverage capital? Some people say that lenders are like partners because they're the ones providing most of the capital. I kind of understand that, but really they're not, in my opinion, and it sounds kind of nuts, but I'm just being real as an investor. Lenders are not partnering with you. They're really giving you, it's an adversarial type of relationship if you think about it, because they're giving you the capital on a property that you own, but then they place a lien on it to say like, I own this spot. So yes, they're your partner in that capacity, but if you can't do or don't do what you're supposed to do, they're going to come after trying to get that loan payback, which is understandably so. Fact is, though, like they're not so much a partner. It's like, hey, you know what? We understand things happen. Like we're going to make sure that this gets figured out. We're going to jump in and fix the problem ourselves or something like that. That's not the kind of partner that a lender is supposed to be, let alone what they are. Okay. So you have to understand there is that adversarial relationship in my mind, at least. And it's nothing against any lenders I've ever dealt with. Anybody I know that's in the lending space is nothing personal. It's just like, we expect that if I own the property, then we're across the table. Like you have the loan, I own the property. We're not on the same side precisely because you put a lien against the property. That's showing that you have a position to hold, which makes sense. So in that regard, different than a partner who's like, hey, I'm willing to go do whatever it takes to make sure this property is successful. That's a partner, right? So that's what I consider to be a partner, at least. Like someone's willing to roll their sleeves up and go do it. Which again, we cannot expect that of a lender. It's just not their responsibility. So equity, though, on that note, equity is usually more expensive than debt. So what does that mean? Well, to have that partner, to have that 100% equity partner, for example, hey, I know somebody that could fund 100%, and I just gave them 50% of the deal. Well, that's great for them, and it might be good for you to simplify things and give some more profit, but it's going to be more expensive because if you look at a project that let's say has a loan of let's say 10% interest only on let's say 12%, no, not 12%, a 12-month basis. Well, let's say I'm actually going to have 6 months of that loan out. So if it's 10% at 12 months, then effectively I'm only paying 5% for 6 months. 5% on, let's say, a couple $100,000 to keep it easy is like $10,000. But if that property has, let's say, $50,000 of profit that I can see in 6 months, and I'm giving 50% of that 50,000, that's 25,000 that I'm giving instead of just 10,000, for example. So most deals that make financial sense without a lender are going to be making less sense. If you could borrow the debt, if you could borrow the capital, which most people can, your credit score needs to be above, in most cases, 620. So that is a limiting factor for some people. But again, if you don't have a 620, then you could get someone to help you as far as a credit partner or another person coming in as a partner that can help boost that credit up a little bit, the blended credit score. That's important because the lender has that PG, that personal guarantee. So they want to make sure that you have, decent credit and that they can basically access that if needed and access your assets and things like that, that you're actually, well, they want to know that you're going to pay, really, I guess the credit score, they're going to pay on time and stuff like that. That's the main thing. But also the exposure of debt and that kind of thing. They're not looking at ratios on commercial lending. The affiliates that we work with at Real Direct Lending don't consider like debt to income. They don't consider, whether you have a job or not. They don't consider W-2 employment. They don't consider all those personal things. Generally speaking, they look at just basically your ability to repay based on credit, and then ultimately the property's, viability as a project. Now, the debt's backed, like we said, by real estate and PG. Typically, I think we talked about that already. Debt is short term when construction is involved, or if you want a bridge loan. So if you need like a bridge loan, it's like usually 12 months or less. And partnerships can be, so to kind of layer the things around here, like partnerships can be a great way to grow relationships. The thing is, like, even then though, it's like you're going to get married. And the question is, have you known this person yet? Have you ever gone on quote unquote a date? Have you ever like spent time with that individual to know them? Or is it just kind of like I kind of know them who they are? Like I wouldn't recommend you to go on Facebook, for example, and to start saying, I'm looking for a business partner for my real estate investment business who wants to contact me and start a partnership today. Like, that's just silly. That doesn't make any sense. What you should say is something like, hey, I'm looking to find people who would love to collaborate with me as I grow my real estate investment business. How do you think we can work together, and where can I bring value to what you offer? Now you're saying, hey, I'm putting my hand out first. Like that, I'm saying I'm putting my hand to help out first, not to say I need to receive something. I'm saying let's go help, right? Let's go find a way to add value. If you want to find a partner, that's usually a better way, because then the people that need your help will actually put their hand back out and say, let's go together. Please come help me so I can help you this way. So That's better than saying, hey, I'm really need to find a partner now to go do this real estate thing. And I need, I want. No. Like, let's see how we serve, right? All right, so this is an old video. I'm not going to show the video. It's kind of embarrassing, but it definitely looked a little different there. So whatever. Top three joint venture structures to consider. See if anybody commented on that one. That's what you guys fund the deal 100%. So somebody can come in and actually fund 100% of the money needed and then just basically be the equity partner. That's an option that we have had on our deals and that you guys could have in your deals. You have an equity partner. I told you about that before. The hybrid model, as I call it, which is basically having the gap funder as the person bringing the equity, right? Or you could structure that as a loan potentially. And then you have first position lender as basically the main commercial renovation loan or construction loan or whatever kind of loan you're getting lender. That's a hybrid between like a debt side and then like a equity slash potential debt side, depending on how you structure it. And then, of course, you have what I call the 100% buyout, or otherwise called the wholesale, right? So when I do a wholesale deal, it's like, look, I don't go into contract. I do not go into contract. JDL Ventures and all the affiliate companies do not go into contract to buy properties that we're not going to close. Let me say that one more time. JDL Ventures and Douglas J. Beck do not go into contract to buy properties that we're not going to close. So in other words, we only go into properties and the contracts on properties that we will close. So if you get an email or you get a notice about a deal that we have available, it's because we're planning on closing on the property, right? We have the capacity to close. Thank God. It's a blessing. It's over almost a decade of experience and relationships that have been established and many trials and tribulations and things that have gone on to allow us and afford us that ability. But the fact is, again, JDL Ventures and Douglas J. Beck, I want to go just to let everybody know, does not make an offer or sign a contract on a property that we're not going to close. We also don't sell properties that we don't own. We also don't sell contracts that we don't have, right? So I'm saying that because a lot of folks out there, unfortunately, a lot of folks out there are doing these things. And I'm here as a PSA for the whole investor community and hope that everyone in the world can hear this loud and clear. And it's not on the screen, but it's hear my voice and see my little picture in the corner there. That if you're out there attempting to wholesale and you're not doing things the right way, you're really exposing yourself in a problematic way. And I'd love to help you. I mean that, and not to like say, hey, send me money or whatever. And I'm saying there might be a financial component depending upon what you need, but just let's have a conversation because there's a lot of people that need what you're trying to get them, which is wholesale deals. A lot of people need to buy property right now. There's not enough supply of property. They need what you have potentially. So let me be the liaison. Let JDL Ventures and Group and let's all of us work together to bring your opportunity to the right people the right way. But let's do it in a way that makes sense so that you're doing it compliantly and right, and you're not going to get yourself in trouble. Because the fact is, a lot of people, and tell me in the comments if I'm wrong, are not out there putting the right stuff out. They're saying properties that they don't have under contract. They have no right. I just heard a story the other day, and I just blew my mind. I'm not going to share the details. Someone posted somewhere online about a property that is not available for a price that's like almost $250,000 less than what it actually is being sold for. And it's not even really being sold. I happen to know the person that owns that property. So it just kind of surprised me. I'm like, how is somebody else going to market this other person who I know is property? It's not me for $250,000 less than what he even considered taking on the property yet and then say that it has certain facts about it that are not accurate and there's no contract. How do I know there's no contract? Because I know the individual who owns the property. So it's just like things like that just don't make a lot of sense. And so I don't recommend anyone to operate that way. I'd recommend say, listen, ambition and excitement, all that stuff is true, yes, but take the opportunity to have a conversation and let's figure out how to do things the right way when it comes to putting properties under contract as a buyer that can perform and then giving someone else the opportunity to step in your shoes, i.e. buy you out. How can someone buy you out, you say? Well, someone could buy you out by basically you selling them the rights to your contract, or someone could buy you out by saying, hey, I'm going to close on the property as a wholesaler. I'm going to get what's called transactional funding, which we can help with Real Direct Lending provide to give you the capital you need to close on the property so long as you have someone else to buy the property from you right then and there. And that's another complicated, still possible way, but that is effectively the wholesale model as I know it to be. Now, others can do things like we've done on occasion where it's like, I'm going to wholesale or get a fee for finding this opportunity, acquisitions fee, but I'm also willing to participate in the project this other way too. And so therefore I can actually have one of my companies make an assignment fee or an acquisitions fee. This is very common, by the way, with apartment deals. If you don't know, there's multiple types of fees that are commonly collected as in acquisitions fees, management fees. all different investor relations is not a fee, but that's just a thing that people do, right? There's all these different things, and it's a whole nother language. But in the residential and small commercial space, I don't see it as commonly, but I know it exists though, where you can say, let's say you have a deal under contract that you could otherwise wholesale it for $20,000. Well, what if you took an acquisitions fee for $10,000 instead of 20, and you brought together a partner that could help you run the construction and run the funding side of it, and you had the other $10,000 to $20,000 from the experience of actually renovating that property and selling that property, or renovating it and keeping it as a rental and retaining ownership in that property? Why not hold on to some stuff? Like, I've learned it. Like, trust me, like, I know, because I've done a lot of flips. We've done basically 51 flips, I think, 51 fix and flips. And we've done about 220 or so, 225 at this point, probably wholesale flips. And so I know from volume that, like, rental properties is kind of light right now. We only have a handful that we currently own, but we are ramping up operations to buy more rentals, and we're looking to buy them in buildings, not in just individuals necessarily. But we're looking at like midterm, short-term rental opportunities. We're looking for cash flow though. So that's like my wife and I's personal investment preferences are going to be cash flowing real estate. So anyways, a lot here. I don't want to take up your whole afternoon. I want to help you guys. We got about 10 minutes left or so. And so let's see. Let me do a quick pause to see what questions we have. I see Linda's out there. I see Hannah, and I see Al. What's up, Al? Al Nicoletti's in Florida. He's a very successful real estate attorney and does a lot of great things. I heard on the probate side. I met him actually down in one of the meetings down there in Southwest Florida some time ago. Wilson, what's up, Wilson? How you doing, man? Good to see you here. Wilson's up in New Jersey. Wilson, I think I sent you a text. We got to reconnect on that too. I'm not sure if you got that or if I saw the last one from you. Hunter, I'm not sure where you're at, Hunter, but I've seen your name before. So what's up, man? Good to see you here. Amit as well. Looks like he's up by the Statue of Liberty. And I'm just looking at my phone, guys. Rebecca up in New Jersey. What's up, Rebecca? Michael, again, I recognize your name, but I'm trying to think from where. Corman, I almost forgot you there in Florida. And Andrea has a question. We'll come right back to that. Adriana, what's up, Adriana? Adriana's up there in PA. Adriana's up there making stuff happen. She's actually one of our favorite members. No disrespect, guys. We love all you guys in the Growth Collective, but Adriana's one of my favorite. She's definitely a go-getter, and she's out there making stuff happen and collaborating with some other folks, and just really excited for where she's going with her business up there in Pennsylvania, and also looking at other states now too because of some opportunities. So that's super exciting. Sherry's there as well. And Damien, I don't know, Facebook and YouTube are freezing lives when people share screens now. Oh, well, I don't know. Maybe it's, is it not? Hopefully it's not freezing now. It's just my own slide. So I hope that's working. Art's here. What's up, Art? And Frank, I think I said what's up before. Let's see. So let's go through. We got a couple of questions. Let me see what I have on my screen next. Let me just check this out. Okay, cool. So we're going to come back to hard money, private money in 2 seconds. Guys, are you good if I take another 15 minutes? I don't know what I even have on my calendar. Let me just check real quick. Okay, I got a solid at least 15 if you guys want it. I'm gonna do a quick survey. Give me a comment, yes, just for 15 minutes, or just put 15. That's cool, whatever. I'm just gonna assume that you guys want me to keep going because I have at least another 20 minutes of content that I think you could benefit from. I see Andrea's here. Are you guys good with that? Am I gonna be talking to myself for the next 15 after 2 o'clock? I'll just keep going. It's all good. All right. Yes, perfect. Ellie's good. All right. So Andrea says, how do you verify that POF is legitimate? Do you call the financial institution or something else? Well, that must have been from another question. Another question, how do you safeguard yourself, this is from before, from doubling down with another wholesaler so that you get your part of the deal? Is there a contract for that? I may have to do this on the first deal. I know I'm totally off the beaten path of our session. That's okay. No, you're good. I mean, a lot of people are probably looking for answers on stuff like that. So I think what you're asking, Andrea, is if there's somebody else who has a deal, how could you make sure that if you bring that opportunity, legally bring that opportunity to somebody else, that you could make sure you're going to get compensated for it? Is that what you're asking? I think that's what you're asking. And there are paperwork items for that. So if you wouldn't mind sending me a DM and give me some more context, I'm happy to take that up with you privately, and we can talk about how we can properly support you with that. Because that's a great indication that you have deal flow and possibly something that we can help you with more specifically. Then as far as Andrea says also, how did you verify the POF is legitimate? Do you call the financial institution or something else? Yeah, you can call the POF provider and see, that the POF is good. I do know there's a number of sites out there that give quote unquote free POFs, but they're automatically generated and no one's touching a computer typically, which is not really what you want. I'm quite sure with our website at Real Direct Lending, like we'll actually, we don't have like an automatic POF. It's going to be an appointment that you have to have. If you go to where it says need POF, it's going to ask you for some information. to get a general idea of you and also any deal that you're working on. And then that's going to then allow you to schedule time for someone in my office to give you the POF, and that's how it works. So just so you know, that's what you're looking there. And how do you verify POF for the end buyer? So if you're not the actual investor closing on the property, is that what you're saying? I guess so. Verify that the same exact way. I mean, you want to contact the institution. Now, if it's a checking account, I've seen checking account POS before and stuff like that, where people send that as opposed to a letter. That's where you're not going to be able to get the bank to tell you that this is, millions of dollars or hundreds of thousands, whatever it is. But I'm talking more in general as like, the lender, not the bank account POF. I would think if you see like a Chase Bank or like a big bank name, and you see someone's LLC as the account holder, and then you see at a balance, that's pretty much verified, unless they're really, doing something, they're trying to create fake documents. That's a whole other story. That's majorly wrong and illegal. So don't do that either. All right. Yeah. And Damien says, yes, you can call the person that issued the POF, ask them about their lending programs. Exactly. So that's right. And if you're talking about the lender, that's right. 100%. Ilya said, yes. Andrea, yes. Ray, what's going on? Candace is here. Awesome. Chris, excellent. Salvatore, yes. Awesome. Great. Okay. So I'll just say, as I have you guys on that wavelength of wholesale, that we are actively looking to buy across the state of Florida, New Jersey. I also have an investor who's looking in Texas and a few other states as well. Pennsylvania, we have a group of people looking for stuff in Pennsylvania. So if you have a deal right now and you're listening to me talk and you haven't had a conversation about that deal with anyone from my office, the best thing to do is to email wholesale, the word wholesale, at jdlventures.com. And then someone from my staff will reach out to you about the details of that. And we'll let you know if we can help you, bring that to one of our investors that we work with, either inside the Growth Collective or in our larger community of investors that we have, or even for us. Like I told you, we're buying a property in Venice, next week, and intend on closing on that, and then ultimately doing something with it after. We're not sure. We're kind of clarifying that right now. But nonetheless, yeah, there you go. Joe just put the email there. Excellent. All right, let's go into the next slide. Thank you guys for some great questions. Andrea, especially, thank you. And then we're going to come back to the next question. So someone posted something there. So, okay, hard money and private money, right? So hard money, just to kind of recap here to give you guys a little bit more lay of the land and kind of understand the terminology, because I think it's important for you all to know. So that when you're talking to people that say they do these things, you understand why they might say certain stuff and do certain things. So hard money, debt-based appraisals, underwriting, scalable, construction is governed by draws. Essentially, there's unlimited funding if you work with a institutional lender that does hard money. It's recourse and non-recourse. I said before, though, it's more commonly recourse, right? Non-recourse is available on a much lower loan to value. And then private money is debt or equity based. Sometimes appraisals involved based on the trust typically between a private money lender and the operator. It's somewhat scalable, but you have to have enough contacts that have the private money that want to participate with you and grow. It's also, like I said, limited by the number of people or connections you have that do PML, private money lending, and how much capital they have available. It's recourse or non-recourse. I typically, to make sure that my private money lender is comfortable, I typically do a recourse, right? I don't just like say I'm signing for the company. Say, listen, I'm signing personally as well. That's my style, because I think that's fair to give my own, name and credibility to that deal. Like, it's just the way I do it. But everybody does it differently. So just, some guys are like really sensitive to that. Others don't really think about it too much. It depends. Again, I'm not here to give you legal advice about recourse, non-recourse, or whatever, just like giving you a perspective of what I do and how it operates. All right. Some tips to get started. All right. It all starts with people. So now this is something that if you've been around me for a little while, you would know that I'm a big believer in connections and relationships to generate business in any business, really. And that's kind of, you just think about it, unless you're selling, to robots or something. I mean, maybe that's going to happen. Who knows? With AI, it's just kind of nuts. But we're talking about, businesses sell to either consumers or other businesses, which are run by people that are basically consumers. So you're telling me it's like, you need to connect with people regardless. The question is, how do you connect with people? So in this case, some people are going to be buyers, right? I realized this early on, but they're also investors who are sometimes lenders or partners or whatever. So case in point, I was coaching one of our clients this morning. He's down here in Florida as well, and he's working on wholesaling a deal out in Texas. So I'm excited. I think he's got a deal closing next week. He told me about too. That one's, I think, in Florida. So congratulations to him. He knows who he is. And he was talking to me, and we were talking about kind of positioning of the deal. And he has the capacity to close on all these properties. He has the financial capacity and the know-how to close on them. So that's great. And you guys kind of do. You just don't realize how yet, and you just haven't figured that out. But it's just like a puzzle. You have right below in the bottom right-hand corner, realdirectlending.com has, like I said before, 75 to 85% of the money that you need for deals that make sense. You just have to focus on the other 15 to 25% and find a deal. So, and that's something we could talk about again in a coaching conversation. But in this gentleman's case, he's got that already available. And so we were talking about how people that are in construction, for example, and I gave an example of a deal recently that we did. People that are in construction are also people that buy property sometimes. People that are in construction are also people that sell property sometimes, as in like they actually sell, like they're agents, like they're construction, they're general contractors, and they're real estate agents. Or sometimes it's that they do loans and they also happen to invest in real estate. Or sometimes it might be that they sell real estate as an agent, but they're also an investor. If anybody in the room here hears me and you are more than one thing in this business of real estate, feel free. And just again, don't be too self-promoting. It's okay if you just want to share. Like, tell us a little about the things you do. What are the one-word nouns that define you? Like, for example, and it doesn't define you as an individual, but just in terms of real estate, like agent, investor, builder, lender, whatever, fill in the blank, inspector, renovator, I don't know, handyman. Like, give me some nouns in the group on the chat right now. I see Larry's here. Larry's a builder out of Arizona who bought a couple properties that I helped him with get funding. That was a while ago. But what's up, Larry? He's out there, I think Arizona still, but he's an active builder and he's got property in Florida he's working on. I don't know whatever happened. I'm curious. Hopefully things went well with that one. Brett is out there. I'm not sure where, but I've seen Brett's name come up before as well. Andrea's got a bunch of questions. I appreciate that. I'm going to come back to that. Ilya has got PML. So Ilya is saying she might be interested in, I think what you're saying is she might be interested in private money lending. So don't all go yelling at Ilya because she's going to get overwhelmed with a bunch of messages probably, but make sure that Ilya, if you're looking to connect to Ilya, if that's what she's saying, make sure you know that she's going to be aware of how you're approaching her. At least I hope she would be, because I mean, it's a good idea. Make sure that, you present something to her that makes sense. So you don't just with throwing deals and saying, hey, do you want to do this? Let's go. Come on. Like, you got to get to know her, maybe understand her preferences, what she likes, what she doesn't like, that kind of thing. Right. And so she's got some additional comments there, but there's some good chat going on in the comments, everybody. So continue that. I'm going to go back to my slides to kind of finish this out for you. But appreciate you guys being interactive and sharing. Flipper, landlord, builder. There you go. So what's up, Larry? Digital high five, man. Appreciate you, man. So basically you got, people that have different hats, right? So why are we going to sit here and say, what's that magic bullet marketing thing to go get that one individual that's got that one thing that I want this one time? Like, I'm saying to myself, no, let me go find people that have many things that I want many different ways. How can I connect to those people? So you want to think about that some, right? And so private money is not much different. So to give you an example, in the beginning, when all we did was wholesale contract flip, a quick flip, or deals, that's all we were doing in the beginning, but we were able to buy. Obviously, we just decided to just flip them. Because that was quicker. It was profitable within a couple of weeks versus like a few months or a year or longer in some cases, right? But the wholesale flips are fast. It's just that there's less money made usually. So when we did that, though, we had a network of investors, and we still do have a network that's rapidly growing every single day, thanks to everybody here and all the people that come into our network and that we connect with and stuff. But the fact is, like, those investors, as we call them, that could potentially buy deals also happen to be people that we've done business with in different ways, like whether it be construction or capital or deal flow, even, like, depends on who it is. But it's just about having conversations either on phone, text, email, Facebook, conversing in person, right? Like having people in your staff, like, potentially reach out and just find out. So anyway, that's just a very important part. Don't be afraid to partner with others. Don't be afraid to work together, collaborate. It doesn't need to be a partnership necessarily. And I said here, partnering, literally partnering is sometimes less, it is less, not I say sometimes, it's actually less expensive, right? Usually, it is a good point. It's a Freudian slip there than not doing the deal. Because I've also had deals where I wish I just didn't do the deal in the first place. There's been deals like that. Let's just be real. I've had challenges. It's not like everything's perfect. So, but partnering would be typically less expensive than not doing it. Because now when we don't do it, like, there's no opportunity by not doing it. It's just you're avoiding the opportunity. So it's got to be a purposeful and intentional avoidance that makes sense to avoid for whatever reason. The risk is too great. It's also less expensive to partner than to lose the deal or lose all of the deal, as in don't make money by yourself. And it's going to be more difficult to deal with that. No pun intended either. Like to work on that, to have to sort of struggle with that fact. And like the way to avoid that is by have somebody really in your corner to push you and promote you and get you where you need to be and be there to give you the words to say and things to do, the people to talk to. Like that's very important. So, and partnering, check it out. Like I said before, it does not need to be like we're a partner. JDL, for example, it does not need to partner with you in every single deal that you do for the rest of your life. But think about it. You have a group here just to kind of capture what's going on. So in case you guys are not following everything, it's okay. It's a lot to consider. We have wholesale deal flow in a couple of specific markets right now, New Jersey, Florida, and Texas on the horizon, plus a few more, right? That's what I said before. We have capital available through real direct lending in mostly every market across the country. And we offer a coaching group that has clients all across the country. Do you guys understand the synergy there that exists for you to participate in this group? And anything we do privately is tremendous for you to accomplish what you want to accomplish as a real estate investor. I hope you guys hear that. And it's a privilege to be here and serve you, like I said, but you have to be willing to receive what I'm serving and have that conversation and have the value exchange take place. So if that resonates, we're going to talk about kind of pulling us all together. And I think I have maybe another 10-ish minutes to do this. So I'm not going to be able to do too much more of the number crunching. I'll kind of go through that if you guys want me to some other time, or go through it in private discussion. But the Mother's Day deal, special, whatever you want to call it, is powerful because it allows a lot of people that have the right intentions to work with us in some capacity in this growth collective. Growth collective is, again, the private coaching, the mastermind group. It's exclusive and working in almost like an apprenticeship type of model is what I'm talking about here. Not just us, telling you exactly what to say, what to do. Like, it's not like that. It's actually going out there and taking some risk, but having us in your corner to reach out to us on a consistent basis. We're having people make their first deal, do their next deal, grow their business by multiples, like get access to things they haven't done before. That's better for most people than doing nothing, right? It's better than watch on the sideline. So the way you get started with that, we're going to talk about in a second. But like, this is like what I share with you today. I hope you all understand this is pretty powerful content that you probably won't find in most paid things. And we're doing this for free. So think about that for a second. If I'm offering this to you for free, can you imagine what it'd be like to be in the paid community, the paid group with us, like to have that be an investment that you make in yourself? I hope you understand that we're not going to dilute it any more than we're here. This is like the baseline. This is like where we're starting. And then from there, we just go up. So like, if you want to kind of like rise faster, then you got to definitely consider paying attention to this part, because this is where, if everything else didn't make sense, like you're going to see like, okay, this makes a lot of sense now. It gets you the partnering though. Again, this is just a general concept. Partnering or collaborating gets you the opportunity to build a relationship, right? So a relationship can be built to many things. A relationship can be built to basically you have just a contact that you can call upon, like a phone a friend when you need help with something, a subject matter expert. That's kind of how we play as a coach a lot of times in the Growth Collective. But also we can be more than that, right? So we can actually do deals with clients. We can do deals with people in this group. We could do deals with you in a sense that if we're looking to buy something, send it over. We'll buy it if it makes sense. Very important. If it makes sense. Does the deal make sense? Okay, we're interested. Let's do it. I just had a call with another client of mine. I said, look, I could probably buy this for 150 or buy it for a little less than 150 and sell it for 150. Probably if what you're telling me is true, based on the numbers you're crunching, if we can put a deal together where you make money and we can get it for a little less than 150, I can probably bring it to an investor for 150 and everybody's making money because of the deal where it's at. So like, I know that because I just go, boom, right there, target, like matching up, right? So in my head, I'm saying, and my team does this with me, where do we find the connections? So because we are connected to a lot of different people, we have and we're not just like names and numbers scattered across, all this information. Like, it's specifically, we can pull a list in our network of people that want to do this particular thing, this particular way. That's very valuable. So like partnering with us, for example, on a deal, right? This is not just about private money at this point. It's about deals too. It's going to give you the opportunity to build a relationship where I've actually had relationships where some of the top wholesale groups in Northern New Jersey made us kind of like semi-exclusive to help them do what's called disposition their deal. We have a contract and we would be like a contracted vendor basically to take their opportunity and assign it. We'd work in conjunction with them. So that's pretty cool. Like, they get that kind of opportunity. That's going back, a couple of years back before COVID. That was a lot of like different types of structures of deals that didn't like bank type properties and auction properties and stuff like that. So anyways, point is like building relationships, right? When you're talking about private money though, specifically, you definitely cannot underestimate like friends, family, previous or current coworkers. Like I've had a mix of all that as far as individuals that have worked with us over the years in private money, and it's been a blessing. And I'm not going to say everybody's name, but if it wasn't for like the individuals that trusted me to do deals and make money together with me, we wouldn't be able to build the business we have. We're still building that business. So it's exciting. And I still have a lot of folks that I'm committed to that have committed to me as well. So I appreciate your commitment, your trust. And it's not been easy sometimes, right? It's been challenging. We have scenarios where projects don't go as planned, things go different directions, but we still find a way to navigate through that. But then we also have scenarios that we could celebrate where people are making the most amount of money they made passively in their life because of the opportunity we've given them to partner up with us in a certain way. We've had scenarios where people can add a stream of income, leveraging certain types of loan vehicles that are available that they can use that capital to put towards a project that makes sense for them to make money because they're leveraging and their cost of capital is so low, but the project opportunity is so much bigger. So that's another beautiful thing is like being able to give that kind of opportunity to somebody is something that's special. So and who would give it to? Like, why wouldn't we want to give that to friends, family, previous and current coworkers, like people that you care about, people that trust you, that love you, that want you to do well? Like that would be the right thing to do, don't you think? It would be the right thing to help those people closest to you, so you can continue to give them those opportunities. And if they say, "Hey, I'm not interested, not right now," no big deal. You just kind of go from there. But that's where the networking part is very, very important. So, where do we find these people in real estate investing? We just had this conversation as well. It's like it's a very simple question, but where do we find real estate investors at? Well, there's a group here of like almost 4,000 people that consider themselves to either be real estate investors or wanting to become real estate investors. So that's one place. But there's like hundreds, if not thousands, of groups like this that exist. That a lot of them are for free. That you can go online and just search like real estate investors in such and such city and state or just such state, and you'll find a group or 5 or 10 or 100, at a particular location. Meetup.com was where we got started in our New Jersey real estate investing mastermind. My first meetup event, those of you that are up in New Jersey, remember this, 2015, I think it was September of 2015, pretty much right before I left corporate. I already had said, like, I'm leaving in October. I knew that that was going to be my first meeting to kind of celebrate my departure, if you would, from corporate America and ultimately go full time as a real estate investor. And then we just kind of kept going since then and probably done well over 100 in person events in New Jersey and Florida since then. So, really excited about that because it's given us the ability to connect to so many people in those two markets. But now, check it out with Zoom, and you guys could all do this too. Like you can connect with people anywhere from anywhere. They could be sitting in another country on vacation, sipping a cocktail or whatever, celebrating a weekend, celebrating your day, celebrating your birthday, whatever. And you're messaging somebody from another country, another state, you're putting a deal together. Like, how about when I was in Costa Rica that year also, and we got a deal closed in New Jersey, in New Brunswick, because I found an investor who I knew from a networking event who bought the deal and money from the title company hit my bank account. And I got a notification on my phone when I'm sitting in another country with my family on vacation. That's pretty cool. Like that's the kind of stuff that you guys want to create, right? I think you all want that. If you guys want that kind of like lifestyle where it's like you have some freedom, then just let me know. Like either put it in, you don't have to put it in the comments. This isn't like to get everybody riled up, but just like just show, like if you want that, just make sure I know that. And so because we focus on this kind of creation of freedoms, if you would. Time freedom to me is like even more important. So see, financial freedom is a big deal because everyone talks about financial freedom, but it's not really about just financials. Like financials will matter, but finances pay for stuff. But the question is, what are you going to pay for though? What are you going to do with your family? What memories will you create? What lifestyle will you choose to design with the quote unquote financial freedoms? Because most of the people I've coached over the years, mentored and worked with hands on, one to one, they don't necessarily want like this massive bank account to always be just filled with money. That sounds like that's what you want. But if you literally sat in a room all day and all you had was millions of dollars in your bank account, do you think your life's going to feel joyful and fulfilled? And the answer is probably no. Most people, it's no. So then you have to have a plan of what you want to design your life to be. Like when we decided on Monday just to go out on the water for a little bit because we happen to be part of a small boat club that we invested in a while back, and we decided to go out there and just spend a couple hours on the water because it's a Monday morning and we had stuff to do, but we needed time together as a family, my wife and I and our youngest. Like that's not something I flaunt or brag about, but I'm saying to be able to do that though, while also growing businesses, because the fact is, it's not just about working 60, 80, 100, 120 hours a week to grow these massive businesses. You have to have a life besides that, right? And I don't know, like, this goes through my head sometimes. Like, do people think that to grow businesses, you have to just be like a workhorse? And there's a fact that you have to have work ethic and you have to have diligence and persistence and you have to be committed. But in my experience, at least, it doesn't say you have to work a million hours a week either. Like, that's kind of opposite of what you really want. So if you guys want to be investors, right? You want to be real estate investors, you want to grow businesses, Don't you need to be intentional about how you design your time, how you design your life, to be intentional and purposeful with how you invest that time, again, with the people that matter the most? And I like to use the word invest because it's not an expenditure, it's an investment. It's going to produce returns. I know that. And I'm not perfect. I'm just here sharing from my perspective, like what it's like. And so, hey, listen, the fact of the matter is that this is all stuff that we cover inside of the private coaching group and the Growth Collective. So now is the chance for you to kind of say, hey, I'm interested in more information. I'm going to come off a screen share, or you're not, and that's okay. No, nothing here, no big deal. We appreciate you guys being here and hanging out. And I'm just going to tell you how that kind of works. And then I'm going to basically go through the questions and we're going to wrap this up in like a couple minutes. So the Mother's Day promo that we have, right? So some of you guys, if you're already in touch with us, this is even better for you. If you've already been in touch with us and you haven't yet decided to join us for some reason, but you're considering it, I'm opening up my favorite number because I'm one of them. I'm one of seven kids. I'm opening up 7 spots in the Growth Collective for what we have as our first official in-house financing offer for the coaching group. And so I'm not going to go through every single detail about how that exactly works because it's not necessary really. There's a small amount of money to start as an investment in yourself, which kind of holds your spot and then shows us that you're committed for the first few months to be in the group. And then from there, we take the rest of the year. It's a 12-month program. We commit that over a 12-month pay, basically. So again, the details you can go into. Numbers are smaller than you probably think. If you've been presented anything from my company, you know these are 3-digit numbers, not 4 or 5-digit numbers. Okay, generally speaking. So at the same time, there's an expectation that you're going to be committed. So we are looking for 7 committed, ambitious, and serious individuals that want to commit, because we're seeing synergy in the group to be more than just coaching at this point. It's becoming a mastermind group, which is my vision, has always been that, to have it be a mastermind. What's a mastermind, Doug? This is a kind of mastermind, but it's not exactly the kind of mastermind that we have inside the Growth Collective. This group here is more about sharing ideas and sharing concepts and sharing wisdom. But inside the Growth Collective, it's actually about true collaboration and joint venturing and putting deals together with each other and finding ways to synergize with each other. There's millions of transactions, millions of dollars of transactions transacting through what's happening in the Growth Collective. It's like stuff that I didn't even envision to occur has occurred and is occurring through the group. That's awesome, right? So to say that in itself is powerful, but then on top of all that, having the group to go to when you need a resource, plus having the actual coaching and the support that you need, is just that much better. So with us, it's unlimited one-on-one support. So what does that look like? Very important for you all. First off, everything that we offer at this point as a Growth Collective has some type of commitment by us, or a guarantee of some type of result, not just not a failure, right? We know you're going to have challenges and potential quote unquote failures, but all of our offers, all of our programs, I'm proud to tell you all, and it's almost 4,000 people hear me and probably many more that'll hear this after, all of the programs have a guarantee. And so we have a 90-day program, which we can talk about some other time. This doesn't have a promo affiliated to it right now. We also have a 12-month program called Startup for 12 months, and that's got a guarantee of a 2x minimum return on the investment, essentially what you make into yourself and into the program. And so the way that works is this is not like a passive money thing or something like that. This is that you're investing into the program, not investing into a project or a business or something like that. It's investing into yourself, basically. But the fact is, through our coaching every single week for multiple hours a week available to you, office hours of sorts, reaching out to us, asking questions, getting different deals reviewed, understanding the numbers, crunching specific scenarios, and bringing your questions to a group, plus one-on-one support in both a private chat that we have specific to you and as a client, and also one that we have available to you in a Facebook group format, a separate group. Through that and more, basically, and the access to the capital, the joint venture structures, all that stuff, you have an experience that's very well-rounded and well-defined to the point where you are at the highest possibility for success if you choose to be, right? And it's a choice you have to make, because it's not just about joining and then all of a sudden deals just start coming together and everything's panning out. No, it's you join the group, we usher you along, and then you have to take action that's specific and intentional, again, to get a result. And so if you're willing to do those things, if you're willing to consider an investment in yourself, if you're willing to consider an investment in time as well for your business, then let's have a conversation, right? Then shoot me a message and say, promo. Just hit me up with the DM promo, okay? PROMO, promo. And that's going to be our indication that we're going to have a conversation. Either myself or someone on my team, my office, is going to reach out hopefully today, right, about that. 7 spots that have an in-house funding offer means that you're not coming up with a 4 or 5 figure investment right off the bat to do this program with us. You're coming up with a much smaller commitment and ultimately a 3-figure per month payment, which is powerful, right? And it doesn't have to go through an approval process. We're not going to go send you out to get a loan with somebody and hope that they get you approved. It's actually in-house because we believe in the program so much. We believe in our ability to serve and support and help you grow and do deals. But it takes someone that's committed, though. Very important. So please don't take the time to talk to us unless if you're not really serious about this. Like, we only want to have people that are committed. So with that being said, hit us up with the DM promo. And then on that note, I'm going to go through and see what questions we have. All right. And then we're going to go from there. I see my buddy Gabe's in the house. Gabe's also got some cool stuff going on. What's up, Gabe? Adam's here. What's up, Adam? Adam's got some cabinets. If you guys need cabinet supply, Adam distributes cabinets. He's also a real estate investor out of the Virginia and North Carolina area there. So Candace is in the room. Maria is here as well. Andrea, that's the money to pay for it. I'm skipping through, I guess. I don't see. Let's see here. Need some wholesale deals. Understood. Yep, everybody needs some deals. I need some deals too. So Vicky, what's going on? How you doing? Ashley's here. What's up, Ashley? And Andrea has some major goals. Her family's involved. Max is here. What's up, Max? Max up there in Brooklyn, also a lender. So feel free to reach out to Max. I respect Max. He's got a good group there. So reach out to them and see what they got for you as well. I'll call you out like that. Tell your dad I said what's up. And then Indira says, yes, goals. And Andrea says, I want that. I'm not sure what that was too, but Andrea says, can I request a POF from your site without my LLC being formed? I cannot form it until I start making money. Well, sort of. So it's, that's a loaded question. We can give a POF to an LLC. We cannot give a POF to an individual. So if you can use the POF to win the deal and have an intention to close with an LLC that you're going to put on that POF, I'd say probably yes. But again, let's have that conversation to make sure I understand specifically what you're asking me there, to make sure we're not giving you the wrong information. Ilya's back, and then Larry's here as well. What's up, Larry? Joe, thank you for sharing the information. Let's see. Andrea says, Andrea is very much motivated here, I can tell. So that's awesome, Andrea. Let's see, working hard to come up with the money. You have me just get the funds. And what are you looking at in the properties? What details? I need details, single fund deals under contract. So again, that's kind of a loaded question. Our buy box, generally speaking, right now has morphed from fix and flip to either one of two things, mainly either a wholesale, which basically a wholesale means I'm going to go ahead and actually find a property that's off market, that's discounted, where I can fund and close on it and put it back on the market and sell it within maybe 45 to 60 days for probably a sizable profit, a 50 to 100K profit at minimum, for doing all that. And that sounds like not a lot of work, but it is a lot of risk. Just, we can talk about that in private. The alternative is a property that has additional value add as a rental opportunity. And in a rental bucket has basically minimum 6 units up to probably about 20 or 30, I would say personally is what I'm interested in. Mostly in Florida, maybe Texas, that has value add, means that it has actually work to be done that I can make it more valuable. The only difference I would say besides that would be I'm open to short-term and mid-term rentals. Midterm has to be proximity to a hospital or to a place of a corporate location, a corporate headquarters of some company that's going to have people come in to visit for 3 to 6 months and working at a clip. That's the kind of client I'm looking to attract for midterm rentals. And with short-term rentals, I want to be by the water within 10, 15 minutes max, ideally closer to the water for short-term rentals, and where Airbnb is actually allowed, which is becoming more and more challenging. So very selective with that as well. Again, in the same markets I mentioned before, I'm not looking for anything to hold in New Jersey. With all due respect from my friends up in New Jersey, I'm not looking to buy and hold in New Jersey. I'd be looking to wholesale or wholesale. And down here in Florida is pretty much where our focus is for acquisitions to keep. Nelson, appreciate you being here as well. Hey, listen, everybody, on that note, I think I gave you guys what I had for today. And essentially, again, if you have a question about the promo offer that I mentioned to you, just go ahead and send me a message directly, promo. Again, it's the first time that we're officially offering in-house funding, and it's at a number that's really a no-brainer. Considering you're going to have a 2x your investment guarantee in 12 months and have that runway to work with us for that full 12 months, it's wow. You guys don't even know some of the things that you're going to get from that. It's pretty powerful. Beyond what I've already said, there's so many things that go into it. It's not just single family, it's multifamily. I've seen people go into syndications. I didn't even know they could do that. Some of our clients are investing into the limited partnership of syndications because now they have access to that through some different connections made in the group. Some individuals are doing properties in different states because they have connections, boots on the ground. They have the funding available. So, man, it's powerful. You're going to see a slew, is that even a word? A bunch, okay? You're going to see a bunch of stuff coming out pretty soon about success stories and updates. We haven't had the time to really collect all the testimonials and stuff, but we have a bunch that are in the works that are happening. And you guys are going to be excited about that. We're going to share that in the group here. We're going to share that on our website. And we're going to share it all across the place. You'll see, we've already got a bunch. If you go to Join the Growth Collective, you guys want to see jointhegrowthcollective.com. You can just check it out. A lot of information. It's a lot to read. You can watch the video if you'd like. You'll hear about the 90-day accelerator. But you can kind of see like below that the testimonials, and there's already, there's probably about 15 or something there, but there's a bunch more that are coming that you guys haven't even heard about yet. And it's exciting because I'm seeing people do their first deal. I'm seeing people grow and multiply their businesses, all kinds of stuff, doing deals virtually, really exciting stuff, and just amazing to be in the middle of that and help you all and serve you that way. So with that being said, God bless everybody. Hope you have an awesome weekend. Happy Mother's Day to all the mothers. Again, this offers for you, right? We're doing this for you to respect you and love you and appreciate you as mothers and to take care of the children of the world. My wife is number one in my life at this point. My number one motherly figure, right? My mother-in-law as well. And God rest my mother's soul. Like I said before, she was an amazing woman when she was here on earth, and then she's up above, shining down. And just pray that she's resting and all well up there with the big guy upstairs. So with that being said, God bless you guys. I'll talk to you real soon. See you next week. Talk to you then.